Hello everyone, thanks for joining us today for today's video recording. Today I'm joined by Suresh from Alquity. How are you doing, Suresh?
Very well indeed. Looking forward to talking to you today.
And likewise, before we get cracking on talking about Alquity and your Asia Fund in particular, let me just do a quick introduction. So Good Green Money, we're ethical IFAs. Clients come to us looking for financial advice. As part of that, we often build portfolios made up of the best ethical funds out there. Alquity, an example of an investment house, investment business that puts together some fantastic funds. We're going to talk about one in particular later on, the Asia Fund. And yeah, hopefully today you'll learn more about them. Alquity was started in 2010 by Paul Robinson, who's now the executive chairman of the business, and Suresh, who's talking to me today, Suresh Mistry, who's now the head of sustainability. So he's a great person for me to be talking to because he knows his stuff inside and out. Alquity are specialists. They specialise not only in ethical funds, but in non-Western funds. So they started life with their Africa fund, and since then they've built on that. So they've got 5 different funds, including Global Impact, Future World, the Indian Subcontinent Fund, and the fund we're concentrating today, the Asia Fund. Single office, central London. You call them a boutique investment house, and I think about 15 people work there. We're going to move on to the Asia Fund. Before we do, there is something particularly good about Alquity, which I've asked Suresh to sort of dwell upon now. Their charitable endeavours are very, very impressive. Their strapline on the front of the website, etc., says life-changing investments. They have a Transforming Lives Foundation, transformed over 65,000 lives. Getting rather excited now. Before I carry on, Suresh, tell me more about this. Why are your investments life-changing?
Thanks, Haydon, for that introduction. Our business, when we founded the business, we set it up on a single premise. That premise being that the way you allocate capital shapes society. And if you looked at the history of the world, you see that many of the challenges we face, whether that's inequality or climate change, are driven by a fundamental misallocation of capital for the pursuit of, so we say, short-term profit rather than the longer-term good. So we wanted to create a business that delivered that long-term good and produced a different product and a different model for the industry. Now, if you let me just share with you a little diagram which kind of captures the essence of our business in its totality. Hopefully, you'll be able to see this little circle on your left-hand side. It's the Alquity Virtuous Circle. This is what the business is founded upon. Firstly, at the top, you see attractive returns. Clearly, as a fund manager, we need to deliver those for our clients, and we do that through a process that is focused on environmental, social, and governance analysis. That's really detailed sustainability analysis of the stocks we invest in. We believe that will drive better returns in the long run. And as a consequence, our portfolios, as Haydon has just described, are what we would call responsible investments, investments that our investors should be proud to own. And then we turn that lens of responsibility on ourselves, and 10% of all the revenues that we earn as a firm are donated to projects where we invest. And as Haydon mentioned, where we invest in emerging markets where we have some of the highest levels of poverty around the world. And so what we want to do is we want to contribute to the improvement in lives for some of those poorest people, to actually get them to have the skills and the knowledge to actually participate in economic development. And if you can get that, you can get more sustainability into society. And then over the longer term, clients benefit from better returns. So when we say life-changing investments, we don't only talk about life-changing in terms of the beneficiaries of our projects. Many of those, as Haydon mentioned, 65,000 so far, have been given things like education, microfinance, opportunities to partake in gainful employment. But also for our investors, because we're providing a product that you can be proud to own, that you can share with your friends and your colleagues, because let's face it, people don't often talk about investments. So we believe that that's actually a change for the good. Also for the companies we're investing in, we work with them to improve the standards for their employees, to ensure that they have great working conditions, that they are able to kind of develop themselves, their skills, and actually promote ethical and responsible business across the globe. And finally, one of the benefits we've seen over the last 10 years is for our own employees. It's life-changing for them to work in an organization that not only focuses on profit, but also has a purpose. And just by doing your job, you're actually helping a lot of people around the world. Go on. Hope that answers your question, Haydon.
No, it does. It answers very, very well, very effectively. And I think calling this a virtuous circle that's a good summary of what you do. Just to re-emphasize, 10% of revenue. So it's not 10% of profit, that's revenue. The bucks that come through the door of this business, they give away. That is quite remarkable. You don't see that very often. Very impressed. Happy to support you guys by, moving my clients your way. Okay, let's drill down a little bit into the Alquity Asia Fund, if we may, as the title suggests. You invest in Asian companies. Some of the bigger ones, China, Taiwan, India, South Korea are where you've got some of your investments. And within that, you've got your ethical criteria. There's a potential investable universe out there, companies you can invest in. You've identified that the ones that fit the bill for you guys is about 30% of what's out there, I understand. And you've got your own bespoke methodology of doing this. I don't want to steal your thunder, but 3D returns, red flags, all good stuff. I'd love it if you could tell me more about that. How do you decide who is in and who is out in your investments in this fund in particular?
No problem at all. So first thing to learn, our investment process is something we've developed over the last 10 years. So it's not something we kind of came about because responsible or ethical investing is something that's a trendy today. And through investing in emerging markets, particularly places like Asia, we've had to do this through the hard knocks, the hard yards of actually going out, seeing companies, learning from our mistakes over the years. You make mistakes in this process, but what we've been able to do is through that process of learning and application, develop skills and develop a technique that has enabled us to be consistent in terms of selecting those great companies and identifying companies that would otherwise, be a real risk for our investors, both from an environmental perspective, but also from a financial perspective. So the first thing, let me just share with you at a high level our investment process. And I won't go into nth degree detail here, but let me just, if I can, hopefully you'll see the diagram there. In a similar way to a lot of other firms and a lot of other funds, our process involves 4 key steps. The first step is really filtering the universe. That's actually reducing all the companies in the Asian universe, the companies in China, Taiwan, etc., into those companies we're interested in, what we would call our core universe. The second step is really analyzing those core companies, those that we've identified, and really doing detailed environmental, social, and governance analysis, as well as the financial. Because what we believe in, the financials have to stack up as much as the ethical and responsible pieces, because we're looking for returns from these investments. Then once we've done that, we have to construct the portfolio. We have to put together a portfolio where the risk in that portfolio is managed as well as the returns, and that we are delivering that portfolio impact that we want to deliver to ensure that there's sustainability in terms of long-term things like carbon emissions and water usage within the portfolio. And finally, once we've got that portfolio up and running, the fourth stage is really just management, engaging stewardship of those holdings to ensure those companies continue to behave as we'd like them to. Now, that is the high step process. For us, ESG does not sit in one of those stages. It sits across all 4. And that's really critical to understand, because if it only sits in one stage, what it means is that actually companies can come through the process that would otherwise not be invested in, and you end up with surprises in your portfolio. And that's something we want to avoid, and I'm sure when you're looking at investments you want to avoid. So for us, in the first step, we have these red flags. These are not just exclusions, companies that or sectors we wouldn't invest in. These could be things like fossil fuels or gambling, etc. I mean, most recently we've excluded fast fashion, for example. So those kinds of sectors which we believe just do not add any value to society. So we exclude them in that first filtering phase. In that filtering phase as well, we also exclude companies whose behavior we just think is unacceptable. So for example, if you're a high carbon emitting industry, maybe you're in mining, for example, but you are not reporting your carbon emissions, well, we just won't invest in you, because we believe somebody who's committing so much carbon into the environment must be able to track that. Some of this carbon emission is just necessary, and I'll explain some of that later, but we want to be working with companies that actually understand that and are managing that those emissions. Secondly, when we're analyzing companies at the second stage, we have our own rating system, and we rate every company A, B, and C. Anything that falls below a C is a fail. We will not invest. So we won't say, oh, we'll invest in this company even though its ESG is poor, because we're going to engage. We don't believe that. We believe if the company's ESG is below a minimum standard, we just won't invest. And secondly, our ESG ratings influence the valuation, the value we think the company is worth, or the value of the shares. So strong ESG companies, we will increase their valuation to reflect the value to the business of those good practices. So if a company is performing well in terms of environment, for example, producing less emissions or less waste, actually that probably translates into better profit in terms of lower costs. So that can actually increase the valuation. The third step of portfolio construction, we want our portfolios to have a much lower carbon emission than the index, and also lower water usage specifically. So we ensure when we construct the portfolios that those companies are that are very responsible in terms of their environmental impact, as well as some of those risk aspects I mentioned earlier. And then finally, when we own those companies, we want to make sure those companies continue to improve. About 4 years ago, for example, we developed something called our key progress indicators, which have about 15 measures of which we track every year those measures in terms of disclosure and reporting to ensure our companies are improving at every step. And of course, linked in with that is our Transforming Lives Foundation, where we actually donate the money that we mentioned earlier. And in fact, what also that enables us to do is for our investment team to go, say, for example, to India, meet some of the beneficiaries and actually talk about how they run their lives, because this consumer information is really useful in our research agenda for the next stocks that may come into our portfolio. So that's how the circle works, and that's how the investment process works. Hope that helps.
No, that's very, very good. That's very detailed. I've got another question for you in a moment, but before I do, just pick up on a couple of things. The fact that you exclude stuff such as fast fashion from the outset is great news, because it would be so easy to, put some fast fashion businesses in there at profitable, but have got, relatively weak governance, etc. Just a couple of clarification points. If anyone's watching this who's not familiar with investing before, just a reminder, ESG, you'll know what that means, but just to cover that off, that's environmental, social, governance issues. And then Suresh, you said that your portfolios are lower than the relative index. Just to explain that to anyone that's watching, Suresh, I know you talk about this stuff to institutions, etc. But anyone that's just a client, so an index is sort of an average for any company that's in a certain area or market or something like that. They might have a certain average carbon footprint. The funds that Suresh and his team put together will also have a carbon footprint, and then the average will be below that for water and carbon compared to just the average company out there, which is a great thing to see. So you're making a smaller carbon footprint by investing in a company in a fund like this, and you would just your average sort of emerging market fund. So just to clarify a couple of points there. Okay, I've got a question for you now. I think you've partly answered this, but I will address this because this is a question that always gets asked when you're dealing with emerging markets, etc. If you're investing in the West, a lot of the governments, etc., have very strong rules, regulations. There are government standards, there's transparency rules. You have to produce very good quality accounts, etc. as we all know, the further afield you go, sometimes information is not there, it's falsified. There's also questions around human rights abuses in some companies. On the one hand, it's really important that what you're doing is taking on board investments in these other nations, because to cope with net zero, we have to do it as a world. We can't just do it in the West. So it's really important. But then there are these other concerns. I mean, how do you steer your way through this to put in place the right type of investments, being aware that there are these other concerns?
Absolutely. It's a really important question. Firstly, for us, we have to separate the company from the country in which it's in, first of all. So we ensure that the companies we invest in have the highest standards of environmental, social, and governance, and particularly around governance. We ensure that they are run by management teams who we trust and whose values are aligned with ours in terms of long-term shareholder growth. So that's where we kind of focus our time and attention. Now, we don't make a judgment call on different political situations in different countries. Our priority is to ensure that our investors are protected wherever they invest, firstly, and that the companies they're investing in are contributing positively to the society in which they're working. Now, that's critical for us. Now, for example, we won't invest in state-owned enterprises because clearly, as we've often seen with many situations, these organizations, these companies become pawns of the political establishment to achieve political aims rather than actual social or economic ones. And so for us, that's how we protect our position and protect our investors, by ensuring those companies we're investing are the best in terms of their behavior and responsibility. Now, there is a challenge at the moment, which is the climate change and the climate transition challenge. And clearly net zero is an important target for us all to achieve. However, I will counter this in a couple of ways. Firstly, there is this perception that it doesn't matter what we do in the West, as long as places like India and China continue to produce carbon, the climate will change as a consequence of that. I agree, carbon emissions anywhere in the world are going to contribute to global warming. However, let's remember, the average UK citizen produces something like 5 or 6 times the annual carbon emissions of an Indian. So our current lifestyles are much more carbon using intensive than those in India. And secondly, many of those countries, India, Vietnam, places like that where we invest in Asia, some of the social progress that they've achieved is way behind us. They haven't got, some basic standards of nutrition, basic standards of accommodation, basic standards of education. And so to have a just climate transition, we must be able to support some of that, as well as ensuring that they keep their carbon emissions within budget. So whilst the world has a carbon budget, what we believe, and what I believe strongly in, is that net zero is something that, yes, emerging markets should aim for, but maybe the West should be looking at net negative, should be looking at saying, can we even go beyond that? Because we're creating some carbon budget. Because let's face it, over the last 100 years, we've probably, emitted more carbon than those countries are going to do themselves in the future. So there is that. Now take that, how does that translate into an investment? Let me give you an example of a company we invest in India. It's a cement company. Now, cement is a high carbon intensive material. However, we believe it's right to invest in that because there are millions and millions of people in India with no sanitation, with no permanent accommodation. So cement is critical in providing that. The companies we invest in, a good example is Heidelberg Cement, for example. They have some of the most efficient cement production facilities in the world. And secondly, for example, in terms of water, they actually collect 5 times more water, rainwater, than they use. So they're actually providing a positive contribution to the environment, despite the challenges of cement production. So that's how we balance things out. We have to take into account the context of the country and the region, and not just think of things as a single global standard.
Oh, that's really insightful. I mean, you've obviously thought this through in your 10-year history in great detail, and these type of dilemmas are just, they're at the bedrock of proper investing in this way. So it's great to hear about your methodology and that example. I mean, we'll come on to some example businesses now, but thank you for the example of that cement company there. As I say, we'll run through a couple of examples now. I always like to talk about one where we're going to see some positive progress environmentally, something that's good for the planet, then something that's more people orientated, something with social positivity, and then ideally an example of one of your investments where you cover both of those. So if you may, if we could start with the first one, Century Iron and Steel is a good example of an environmentally positive investment. Tell me all about Century Iron and Steel.
Yeah, I mean, from the name, you think, oh my God, that's not an environmental company. We'd love to invest in, great renewable and solar power companies, but if you look at the track record of many of these, there's lots of issues around supply chains and forced labor and all sorts of issues, regulatory issues as well. However, a company like Century Iron and Steel, they're a metal fabricator, and what they do is they produce the pins and the structures that are used in offshore wind turbines. So they're contributing to the decarbonization in Taiwan, but they're doing it through providing the materials that are required for those wind turbines. And Taiwan is set on a journey towards increasing the number of gigawatts, I think from something like 5 gigawatts to something like, by another 10 gigawatts, the amount of energy produced from our offshore wind turbines. So here's a great investment opportunity, but also a great company that's positively contributing to the planet.
That is excellent. Good. That is quite different as well to some of the other examples that I've spoken to with others. So that's a really good one to go through. A people example, you've chosen an Indian company called Amrutanjan.
Yeah, Amrutanjan.
Do tell me about them.
Yeah, no problem at all. Great, difficult to say, but fantastic. I think it's a 150-year-old traditional Indian business. They used to be in pain balms and things like Vicks, the things you use when you've got flu or a cold. However, because of their brand, they moved into feminine hygiene and they have a brand called Comfy, which is something like 10-20% cheaper than most other traditional mass market brands in India. And this is a big issue in India right now because something like 80% of rural women actually don't use hygienic sanitary products. So they're using newspapers, things like that. And so by providing this service and providing these cheap products, what we're enabled to do is give women the opportunity to avoid kind of infection and other illnesses, and just a degree of comfort and satisfaction that otherwise they would not get, because they just can't afford these products.
That's great. Good example. I like that. Okay. And then the third example, I find this one the most exciting. This is where we cover people and the planet.
Yeah.
Phenomenal. Absolutely phenomenal. Tell me about Lemon Tree Hotels.
Yeah, Lemon Tree Hotels, they're a chain of hotels, as the name says, in India, kind of a bit like, I would say, something like Premier Inn or something like that in the UK, if you are familiar. And what they do is, one of the things they've done since the beginning is focus on employing disabled employees. And they have something like 20% of all their employees are actually registered disabled. So it's a great opportunity, giving people who otherwise would not get an opportunity to work employment. And at the same time, over the last 3 years, they've reduced the carbon intensity of their rooms by something like 67%, and their water intensity usage in their hotels by something like 50%. So this is a company that's really doing some fantastic stuff in terms of both the environment, but also in terms of helping some of those people which otherwise would be marginalized and not given the opportunity to work.
That's fantastic. I mean, it almost sounds like it's a social enterprise rather than a business as such, and it's very progressive. I love the fact you're investing with those guys. No, you've given some really good colour there. So you've added to the discussion today, definitely, by running through those. I think we've had a good discussion. Covered a lot of ground here. Before I sort of wrap things up, do you think there's anything at all that we may have missed today that you'd just like to highlight at all?
I guess I'd like to. It's a bugbear of mine, but maybe something I'd like to share. I think one of the challenges that investors face is trying to select the right fund for themselves, and to try and cut through that commercial jargon. Maybe you can call it greenwashing, to try and identify who is really kind of consistently investing in alignment with their values. And I'd kind of give people two suggestions or two thoughts. Firstly, is when you're looking at a product, also look at the product provider, not just the product itself. Are the values of the fund manager aligned with yours? Because what you'll find is the driving decision making behind a fund and the processes a fund use are actually built in by the culture of the organization. That starts at the top. And so what I'd encourage you to do is look at those companies rather than just the funds, and where are those companies focused. And secondly, for us at Alquity, it was very important to have independent verification of our process. We can claim everything. I've shown you the slide deck and the investment process. Now, what's your confirmation that what I'm saying to you is actually what we do? Now, for us, we are certified by the label ISR in France, which is an award, a certification awarded by the French Finance Ministry. This involves a 3-day on-site audit of our entire process, done by an external consultant. We have no influence over them. They come in and they check everything. And this gives you and us the confidence that, and for me, that our investment team are actually doing what we say. And I think that's really important when selecting investments. And I think to finish off with, I just kind of, finish with a quote that I heard, from actually the recently deceased Desmond Tutu. He said this, and I think this is really important for people when they're thinking, well, what can I do with my small pension pot or whatever it may be? And I think his quote, which is, he says, do your little bit of good wherever you are. It's those little bits of good put together that overwhelm the world. And I think that's the message I'd like to leave everybody with today.
That's fantastic. No, that's a very thoughtful quote, and something I would abide by. I think, of course, you do as well. Just to pick up on a couple of things, as I do, you mentioned the ISR mark that you have. So anyone that's familiar with investing, social investing at all, you'll know about SRI, socially responsible investments. It's basically the same words switched around. French. It's investments of social responsibility. It's actually something that's government backed by the French, and some say that the European certification process is slightly ahead of the UK, even though we started the whole game a number of years ago. So that's a really, just to re-emphasize that, that's a great mark for you guys to achieve. And well, my closing remarks really, I always say that if you're watching this today, this is not advice, this is information. Suresh has said, if you're thinking about investing in this fund, of course you won't do that yourself. You'll do that through a professional, such as an advisor at Good Green Money or somebody else out there, one of the other ethical advisors out there in the markets. Plenty of us, and we're all good at what we do. So please don't do this off your own back. Go through a professional. And then final thing to say is, if you like what you've seen today, do subscribe to our YouTube channel. Every time we bring up new content, you'll then be informed. I think we're about done. Suresh, this has been excellent. Thank you very much for your time today. That's a really strong insight into both the Asia Fund and Alquity at a high level. And as you just said yourself, I think it's so important that you have to have a culture throughout your whole business for people to really have true belief that what you're doing is the right thing. And it's great to see that you do. You've given some clear evidence of that. So I'll see you again. I'll catch up with you soon.
Goodbye. Thank you.